SPACs are crashing and here's how to take advantage of it. What's happening, investors? Dean here. Today we're going to speak about some SPAC stocks. SPACs are down a lot right now as the hype dies down, and there are some really good companies that are very, very cheap because of this. And I see them as some really good buying opportunity. In this video, we're going to look at some cheap SPAC stocks to buy now. Make sure you stay till the end to find out which of the SPACs we speak about I think has the most upside potential. Some of the SPACs we speak about are actually post-merger SPACs. I still classify them as SPACs for the sake of this video because they are also down a lot right now and sold off the same as the pre-merger SPACs. Before we do that, could I just ask that you invest in the like button, add the subscribe button to your portfolio and turn on notifications. We talk about stocks all the time and my goal is to get to 1,000 subscribers. So if you can just subscribe to my channel, you'd really help me get there. I am not a financial advisor and this is not financial advice. Always do your own research before investing. The first SPAC we're speaking about is ChargePoint. This is a company a lot of you probably know. If you don't know who ChargePoint are, they are an EV charging company and they are actually the biggest EV charging company and they have sold off a lot from all-time highs. What I like most about ChargePoint, besides from their business model, is that they are going to benefit massive from Biden being in office. President Biden actually plans on installing 500,000 charging stations across the US by the year 2030. And it would only make sense that the biggest EV charging company get a piece of this. When you look at how the world's going and how it's moving towards EV, I think this sell-off is really unreasonable, and over the coming years, ChargePoint will be a winning stock. ChargePoint stock is currently trading down nearly 50% from all-time highs of around $49 at $27.65 a share. ChargePoint stock is actually trading down nearly 50% from all-time highs of around $49. At $27.65 a share, they did go down as low as just over $20 a share towards the end of last month. But since then, they have moved up. I don't expect CHPT stock to have many crazy moves in one direction or another, but I think most of the hype about stack stocks is now gone and we will start to see a more steady kind of move in the upwards direction. If you're looking at buying CHPT stock, I wouldn't be looking at it as a swing trade. I know pre-merger, a lot of people were buying in and selling it, which is fine, but I think now that it's more of a long-term buy and hold kind of play. The next company we're speaking about is Stable Road Acquisition and their merger with Momentus. Stable Road Acquisition, ticker symbol SRAC, are merging with the space company Momentus Space. And out of the companies we speak about today, this one actually presents the least amount of risk. SRAC trades at just under $12 a share right now, and the net asset value of this SPAC is $10 a share. So there is very little downside in this one. It can fall lower after the merger is finalized. I personally think it won't. But until then, the floor is really $10 a share. So it's a very, very safe play in terms of minimal downside. SRAC stock is down over 56% from all-time highs of $29.18 a share. I do think at that price, the stock was overpriced, and I just feel that people were really excited that it was a SPAC and it was a space SPAC in particular. At the prices they are now, I do think it is a good time to buy. I do think at that price that they were overpriced, and I think people were just really excited that it was a SPAC, but particularly because it was a space SPAC. But at the prices they are now, I really do think it's a good time to buy. Momentus is still a young company, and as of September 30, the company reported contracts that would generate 90 million in sales over the next several years. However, the company says that the space economy is set to grow from a $425 billion industry in 2020 to a $1.4 trillion industry in 2030. They see opportunity in the space sector to provide in-space transportation, satellite as a service, and in-orbit services. I do see Momentus as being a good company to hold, particularly if you want to expose yourself to some space plays and if they are able to execute what they think. So if Momentus are able to do what they're planning to do and what they claim they can do, I really do see them as a strong company to buy and hold. Lastly, this stock is my favorite of the three. It's a stock that I am heavily invested in, and that is CCIV, which is of course merging with Lucid Motors. I truly believe that they are Tesla's biggest competition. This SPAC was one of the craziest rides for me personally. I got into CCIV really early, and I was holding them all the way up to $65 a share, and it was quite a large position for me. I thought even at the prices of $65 a share, they could go a lot higher. And to be honest, they should have if the valuation came out as to what we thought. However, once the merger got confirmed, as a lot of you know, the stock crashed because the valuation didn't come to what we thought it would be. And it's really unfortunate because I know a lot of people bought in at those high prices and they are down a lot if they're still holding right now. Currently, they're trading at under $23 a share. Fortunately for me, I'm still in the green, but as I said, I know a lot of people aren't. And I feel that Lucid Motors will come back. I do understand a sell-off due to the valuation not coming out to what we thought. However, I don't think it's justified at the prices it is now. Once they start delivering vehicles, once numbers start coming out and people start seeing these vehicles on the road, in the news, and we really start to compare them with other EV companies like Tesla and NIO, once we see their numbers and they really start speeding up production, I do see us not only getting back to the highs of $65 a share, but surpassing them over the next few years. I really believe that. So out of the three, CCIV, Lucid Motors is definitely my favorite stock. There are so many undervalued SPACs right now that we don't have time in one video to go through all of them because we will be here all day. However, hit the like button to get this video out there. It really helps me out. So if you got something from this video, just hit the like button. I'd really appreciate it. Subscribe and turn on notifications. I will continue to cover not only the companies we spoke about today, but more SPAC stocks. So hit the like button, subscribe, and turn on notifications. It really helps me out. Let me know in the comments which of the SPACs that we spoke about today is your favorite. Check out my latest video. I made a video on the best growth stocks to buy now. So I'll leave it at the end of this one. Thank you so much for watching, guys. Till next time, have a good one.